Well, Gijima's shares continue to tumble today. That's as the IT firm swung to a first half loss due to tough market conditions. Now, Gijima plans to raise 150 million rands by way of a renounceable rights offer to recapitalise the company. Let's delve into the turnaround strategy that is being put on the table. Eileen Wilton, interim CEO of Gijima, is standing by on the line. Eileen, thanks so much for your time. So, of course, it seems that news last week coming through of the loss reported, I think, around 23 million rand really shocked the market, and everyone took the long weekend to delve into what this means and came back and sold off the share. We saw it tumbling by 40% yesterday. So what's the plan now for the company? I mean, what is the big turnaround strategy going to be?
Good evening. Thank you very much for having me. From a Gijima perspective, we have been actioning our turnaround plan since the beginning of this year. When we had a look at the areas that were causing our loss, we found they came from two main areas. The one is obviously our top line growth. Now in Gijima we had implemented a new strategy, a client-centric strategy to go to market. And the implementation of that is simply lagging in terms of driving out the benefits that we would get from that restructuring. We are seeing already that the benefits of moving to this client-centric structure starting to come through in the early part of this year. So we're very confident that it's the right strategy, and I think from a logic point of view, nobody can argue that actually focusing on the business needs of your customers or potential customers has to be the way to go. So we're confident we have the right strategy, but we simply have a lag in terms of driving the top line growth.
In the meantime, of course, we've seen a sharp sell-off in the share price, and that, of course, does that put your rights offer in jeopardy to raise the 150 million rand you need?
The rights offer is not in jeopardy. It's about to go to market. We did the cautionary last week. We have firm undertakings from our major investors to follow their rights. So we have 70% of the 70% of the investors, of the shareholders, already committed to follow their rights. So we will achieve the raising of the 150 million rand.
Would you say this puts the Gijima in a vulnerable position right now, given where the share price is trading right now, for a potential competitor to come along and see an opportunity of perhaps putting in a hostile bid?
The board will consider the implications of this and has done so in terms of looking at the rights offer and the price at which the rights offer has been launched. But our major shareholders are backing us, and we'll feel confident that with only 30% of the shares available in the market, that we still sit in a very positive place to being able to defend against a hostile bid.
And I suppose you could just give us a view right now on private sector and government spend on information technology services right now. What are you seeing from that perspective of the economy?
There is a lot of tightness in the market in general, and in fact, if you think of the points you were raising prior to taking this call from me, the economy is tight and competition is fierce. We don't see a difference in spending between private sector and government sector per se, although government sector has announced a number of key programs that have very high ICT dependencies on them. From a Gijima point of view, we have 30% of our business coming from government sector and 70% of our business coming from private sector, and we look to retain those market positions in more or less those proportions going forward.